Just over 2 weeks ago, Fundrise reported what I and many others thought to be a first ever negative quarter return in over 11 years. Some started panicking and selling their shares. Others, like myself, were obviously disappointed but not surprised considering the macroeconomic conditions that are taking place today. However, earlier this week, Fundrise CEO Ben Miller and the team released a third quarter letter to investors, which, among other things, states that the third quarter average return was actually positive. Let's take a deeper look at what is going on here coming up. If you're new to Fundrise, make sure to open a new account using my referral link in the description below and deposit just $10. For a limited time only, you will receive a $50 bonus, absolutely free, no strings attached. Don't miss this opportunity. Now, let's get started. Let's first go over the key points of this letter, and of course, I will give my opinion about all of this. Right off the bat, Fundrise team attempts to reinforce investors' confidence in Fundrise as an investment platform by showing this well-known chart that you could see right here. As you could see, this chart shows that Fundrise is actually up year to date by 5.4%, while the public REITs and stocks are down by 28 and 23% respectively. We can add crypto to this chart, which would be down probably around 60%. Of course, these numbers are all legitimate and we all should be very, very happy to see these. Due to Fundrise's conservative investment strategy, we're able to withstand this bear market much better than other investment vehicles. However, remember, having a conservative investment strategy reduces your potential returns in bull markets, and that is why those years where the stock market goes up by 20%, Fundrise may only go up by 8%. And that is why diversification is very, very important. As an investor, you should never have all your eggs in one basket and should have a bit of each type of investment in your general portfolio. Now, let's talk about the conflicting results between my third quarter return and the official statement from Fundrise. Here's what Fundrise writes, and I quote, "The average return across all clients' accounts for Q3 was positive at 0.09%, resulting in a year-to-date average return of 5.40%, an outperformance relative to the stock market of approximately 30%. Now, I understand that each investor's portfolio is different, and therefore the end quarter results will be different. But all the people I've spoken to, either on social media or in person or on Reddit, had negative third quarter performance. My third quarter return across my two accounts was negative 1.3%, while apparently the average return was a positive 0.09. And I recently actually got an email that breaks down my third quarter, and all of my losses were because the value, the appreciation of the projects has decreased, and of course the dividend part was positive, so that is the income from rental and interest. Now, this difference could possibly be attributed to different investment plans that I and many of my viewers and friends are a part of. As many of you know, I absolutely believe into the long-term growth investment plan, which gets the majority of returns in terms of appreciation rather than dividend. So it is possible that the people I've spoken to are all a part of a long-term growth investment plan. It is also more likely that when Fundrise did the average return calculations, there were more balanced and supplemental income investors out there. I would love to see a chart that breaks down the returns for the third quarter relative to the investment plan chosen by all the investors in Fundrise, so we can confirm that this is where this confusion came from. No such chart is available right now, but it will likely be revealed at the end of 2022. So I would like to take back my statement from the previous video where I say that Fundrise has made history by reporting a first ever negative quarter return. In fact, the streak has not been broken and Fundrise has not reported a negative quarter in over 11 years. This should make us all very confident about the future with Fundrise. Now, with that out of the way, let's go over a few other important points that Fundrise team has reported. Fundrise team believes that we're yet to see the bottom of the bear market. Oh no, so far the Fundrise team has been on point with their predictions, let me say that. Fundrise team points to rising interest rates as a cause for the slow growth of the economy and the increased cost to borrow money. Due to this, job losses, which we can already see many companies cutting jobs, but the job losses will get worse. They will start to increase, and because of that, the asset values will decline further. Fundrise also believes that recession has already probably started somewhere in June of 2022, but unfortunately, it may get worse depending on how high and for how long the Fed is willing to raise interest rates in order to tame this red-hot inflation back to 2%. Fundrise then goes on to reassure us that Fundrise REITs are a strong investment asset to hold in this inflationary environment because Fundrise portfolio is made up of real assets, right? Actual houses, which in contrast to the financial assets derive their value from the utility they provide in people's everyday lives. Rental housing, which makes up the foundation of many portfolios, is a basic human necessity, meaning that even as everything gets more expensive and people start cutting back on spending on non-essential items and comforts, they will continue to spend a reliable percentage of their income on food and shelter. Come to think of it, we pretty much have no choice but to spend our money first on food and shelter and then everything else. In fact, rent is one of the costs that has historically kept pace with inflation, making rental housing one of the few investment assets potentially able to hold its value during periods like we're experiencing right now. Now, the above sounds a lot like we, long-term growth investors, should switch our investment plans to balanced or supplemental income in order to get more of our returns in terms of dividends and not experience the losses from appreciation. But is that really the best thing to do? Make sure to like and subscribe and look out for my next video where I will explain why we should or should not switch investment plans. That is it for me, guys, but I want to hear from you. Which investment plan are you a part of? And did you have a positive or a negative third quarter return with Fundrise? Let me know. Thank you so much for watching, and I'll see you in the next one. Take care. Peace.